Welcome to TheoTrade. This is Don Kaufman. It's May 26th, 2023. Just about 45 minutes left inside of your trading week. Here we are, coming, of course, into the holiday weekend. It's Memorial Day, people. Markets will be closed on Monday, but look, we're not home yet. S&Ps, they are ripping right now. I mean, the SPUs, they're up some 60 handles. That's nothing because the NASDAQ is up almost 400 points here. Yeah, and there's still time on the clock. Of course, the theme of this weekend's update, it's what everybody's talking about. It's a one-stock stock market. Yes, and then there was one. How Nvidia saved the marketplace here. Look, we're going to cover that and a lot more here on this weekend's update. To begin with, we are just above an absolutely critical level inside of the S&Ps. And we've talked about this basically ad nauseum at this point. Look, here is 42.11. Oh, we've just been skirting the 42.11 throughout the course of most of this trading session. And we're just north of that right now. And I have to tell you, it's a critical level where we're at because on any one of these gravity points, and that's what we actually define this 42.11, we term it a gravity point. It's a spot where it's not really support and resistance per se, but it's a spot where the markets are effectively drawn to. And these gravity points can have anywhere from 10 to 12 degrees of freedom. So it can have 12 points to the upside, 12 points to the downside. And again, if we're right at 42.11, you look 12 points to the upside, like this is critical because I'm going to tell you exactly what can happen. Right here, right now, you can actually see servos will turn on and actually burst to the upside. People, we are close, right? This is very, very close to where the markets could effectively break the range. Remember, I've been looking extensively at this like 90-day 1 hour. Let me go ahead and close up this left side bar just to give you a feel of how extensive this range happens to be. And this range actually takes us from the beginning, again, the beginning of April. Here we are right into the end of May. And for the first time in a long time, we are threatening the upside. Obviously, okay, just the other day, we were actually trading, again, that's 42.27, 42.27. We're hop, skip, and jump off of it. But again, as I said to you, as we are very close to breaking off to the upper edge, of course, of this gravity point, you would see a big burst in volume. And at that point, it would be on. Like that would be a real rally into, of course, the close for today. Nevertheless, look, you're not home yet. You're just not home yet. And you can look at this all you want, that 90-day until we officially break to the upside, okay? There's just no difference. And I keep reiterating this exact same phrase. There's no difference between a 42.11, okay, and a 41.06. Because quite literally, I said it last weekend, okay? And of course, last weekend we're to the upper edge of it. Guess what happened throughout the course of the week? We actually touched just shy of the 41.06, only to come right back up to the 42.11. So what's it going to be? Of course, everybody right now, no, we're leaning towards breaking out to the upside. Yeah, we were leaning there last weekend until, of course, we broke to the downside, only to have us actually return back up. Look, I've seen this movie before. Right? There's no discernible difference between those two. And you have to just realize that, overall, one of the things we're going to talk about is not only the range, but basically there's only a handful of stocks that are even driving us to the upside right now. And that's why I've actually entitled this weekend's update, it's what I call a one-stock stock market. And yeah, Nvidia plays a critical role. Okay. Nvidia, in my opinion, kind of saved the markets a little bit, because things were ugly earlier this week. And when I say they were ugly earlier this week, I mean, people, you have to understand, on Wednesday, we were threatening to break out to the downside. Yeah, of course, until, well, Nvidia's earnings came out. And what were they? No, does it really make a difference? It was good. And you could say it's overbought, it's oversold. It doesn't matter what you think. I mean, you had one stock that effectively saved markets at that point. And that's exactly what we're going to cover here momentarily. Before we get there, one of the first things I want to cover, okay, is same range, 8 weeks now in the book. All right, so we have not officially broken range. I'll give you this. You got 40 minutes left inside of the trading session. Okay, it's possible, it's plausible that we do break range to the upside here, maybe even after I finish, of course, the weekend update. But I'm going to tell you, when I say 8 weeks in the same range, what I'm referencing is here you go. Okay. Okay. This is the range that defines all of us. So you're in the 8th week of the exact same range. This week, of course, when it comes to expected move, we did crack the downside of the expected move. It's just so interesting because you're 2 days removed from like, oh, we're going to the downside. That's it. We're going to breach. And all of a sudden, bam, right back to the upside, all again on one stock's earnings, which brings me, of course, to the next bullet over here, which of course is Nvidia. So let's just briefly talk about Nvidia. So one stock effectively started to drive order flow positively, that is, into most of the monsters of tech. Now, the monsters of tech, when I talk about the monsters of tech, this is like a conglomerate of, again, it's Meta, it's Apple, it's Microsoft, it's Google, it's Amazon, right? But, you don't even have to look per se at the monsters of tech anymore. I mean, the NASDAQ itself is, well, a monster, okay? And what's so interesting about this is, well, just look back. There was a hard fade earlier this week, hard fade. Like that was like, we're coming down right into the point where Nvidia came out. And of course, we caught fire to the upside. The one thing, again, it's just, again, when you're inside this range, there's no discernible difference, right? The market's just going to ebb and flow from that 4,600 right back up to the, 4,100 right back up to the 4,200 and back down again. But clearly there has been a massive change inside of the NASDAQ. Speaking of the NASDAQ, look at this thing from an expected move point of view. It's almost 2 deviation move outside of it. We'll talk more about that in just a moment. Okay. When it comes down to it, though, in Nvidia, okay, Nvidia, the first thing I really want to mention on the front of Nvidia, okay, right here, listen, this is why you don't sell options naked around earnings. Okay. You simply don't do it. Now, a lot of people know that I am a big, okay, advocate of premium selling. Have been for a considerable period of time. However, I do not, okay, and will not sell premium naked around earnings announcements. And this is where people come out, they go, but the implied volatility is so elevated. Implied volatility is elevated as a function, okay, of expected move. It's the exact same thing. And if you actually looked at thousands and thousands of occurrences around earnings, effectively what you have is a very efficient marketplace. Anyway, long story short over here is, the stock was actually trading roughly at 305. Here we are at the end of the week, 390. The expected move, okay, the expected move is equivalent to about $21. So, net, let's just put it this, okay? It was a 4 sigma move. All right, based on the expected move, okay, I'm just rounding it right now, but it's effectively like a 4 deviation move, which for those of you that are a little bit more mathematically inclined individuals, what's the probability of that happening? Like none. I love asking that question. The probability, okay, of a 4 standard deviation, people go, that doesn't even exist, except it does. There's fat tails in this business, right? Like things get wild, and they got wild today to the or the other day to the upside, and that was enough. Okay, when I call it like the one stock market, that was enough to drive order flow to everything. All of a sudden, it was just like let's just now catch fire to the upside. And what's happening at this point is we're squeezing all over the place. And I talked extensively about, of course, gamma squeeze last weekend, but you want to see some big movement. Look at stuff like Tesla today. It doesn't matter what you think about Tesla. I don't care. I'm not here to talk about Tesla. I'm here to talk about the fact that, look at the number of calls trading in here. Okay, it is very evident, again, that we're getting, just algorithms that are just firing in. I mean, firing in to drive flow to the upside. Once you figure out that you only need 1 or 2 stocks, okay, to drive an entire marketplace, what else do you need, right? They can move the marketplace now by actually driving 1 or 2 stocks. And in today's marketplace, you haven't seen much action. Look at like Amazon. I'll give you an example of this. Look at Amazon. Amazon hasn't really done anything this week. Nope, not until today, okay? Apple, okay, well, Apple hasn't really done that much. Picked up off the bottom over there. Microsoft, okay, Microsoft has done absolutely nothing. In fact, Microsoft looked like it was coming down hard on Wednesday. Huge pop back to the upside. But look at all of the call activity in here. And effectively what we've got is again, activity inside of the calls, okay? Buyers of calls are actually driving hedges. Hedges are actually buying stock, and away we go. I mean, net, what else do you have? And that's one of the points I want to make is, Nvidia saved the market. There's just no question Nvidia saved the market. Had Nvidia come out and the earnings were either lackluster or rather flat out there or even downbeat, okay, that was it. We were going to break range to the downside, but it's become kind of a one stock market. And it was a bit of an anomaly, which is fine, okay, which is fine. But it is noticeable right now. We have not been able to break the range yet to the upside. As I said to you guys a moment ago, 42.11, okay, until you're sitting up at you got to be at 42.30, 42.40, call me crazy, but until you're up there, which is only another 15 to 20 points away in the S&Ps, until you're up there, you haven't broken range. Now, here's the interesting part of it. So I was talking about the same range. 8 weeks are in the books, right? Talking about how Nvidia saved the marketplace and all of a sudden created this gigantic bid into tech stocks. Not telling you anything you didn't know, okay? But I want to update a little bit about sectors because this is the part that, really resonates with me. So you guys know I'm a bit of a bear. Okay, I'm not picking sectors because I'm bearish. I just want to actually show some reality in here. Here's XLP, which is none other than consumer staples. For those of you that don't know this, consumer staples. That, people, is a chart. Okay, I mean, it's horrendous. If you actually look, okay, at some of the recent weeks, outside the expected move, massive breach outside. It's like almost a 3 deviation move, came back a little bit, but we're talking just horrendous moves inside of the XLP. And more appropriately, a way to look at this, do you know actually consumer staples is now down on the year? Okay, so I started with that. Then I want to come over to XHB. Now, these are not pivotal sectors per se, even though I'm bringing up like consumer staples and so forth. I won't even bring up consumer discretionary because consumer discretionary, XLY is nothing more than like Tesla and Amazon. But here's XHB. And the reason I'm bringing up XHB is because this one, okay, I'm just dumbfounded. I really am. I think that this might be the short of the year. And that's exactly why I am bringing it up. And I have actually stepped in and I've shorted it a number of times. I am short XHB in a number of ways. This is actually the home builders. And the reason I'm actually short this is because interest rates, they're flying. And we're going to talk about that again momentarily. Anyway, I wanted to bring up one that was getting killed that a lot of people didn't realize was getting killed, okay, which is consumer staples. Then you bring up XHB and you're like, really? Really? It's up 15%? I look at that as incredibly opportunistic. Then I want to bring up IWM, which is, of course, the Russell. Why? It's flat on the year. Now, I've talked about that extensively. Then, of course, bring up the spiders. Where are the spiders? Up 10%. Okay, but wait, there's more. Let's actually bring up the financials. Financials are down, okay, over about 6.5%. Then we're going to look at the XLE, which, of course, is the energy sector. Energy sector is down almost 7%. Okay, you're going to like this one. Let's actually go to the Dow. How often do I bring up the Dow? Never. The Dow is massively unchanged on the year. And of course, who's the big winner? The NASDAQ. Okay, the reason I'm bringing this up is the bifurcation. Okay, and just, again, just wild divergences in the marketplace. Okay, it's becoming completely and totally unruly at this point. And to point out the dangers of this, when I talk about, it's a one stock market, again, I'm being a little bit facetious. Of course, Nvidia saved the marketplace, and it was one stock that did save the marketplace, but it still comes down to the same, couple of tech stocks. But you have to realize that the entire logic of like diversification, I've talked about this, ad nauseum, is gone. But I'm going to actually bring up another interesting point right now. If you look and we're 8 weeks in the exact same range, let me ask you something. If we're 8 weeks in the exact same range, then why is VIX, okay, and I want to bring up the history of VIX over here, like 10 years. Why is VIX still trading at 18? Okay, and think about this. And again, I'm not trying to be facetious in any way with this one, okay? Now, we've seen very tight ranges. We've seen very tight ranges in a lot of these years, 14, 15, 16, 2017, nice size rally. 18, things got a little crazy, okay? But, the market, ebbs and flows back and forth. But when you're in a 100-point range, why is the VIX still at 18? Okay, that's not low, it's high. And the point I'm trying to make, because the marketplace actually sees it. What does it see? The entire marketplace hinges on a handful of stocks. You realize one big tech stock goes, it's over. It's over. There's nothing to hold us up. Let me ask you, what other sectors are there to hold us up? Did I mention that the financials, okay, which is, second to basically, tech, the financials, where are they? They're down on the year. Where's the energy sector? Oh, down bigger on the year, okay? You start looking at stuff like the Dow. Now, look, I'm not into the Dow. I'm really not into the Dow. But it is insightful to see that the Dow, okay, is unchanged. The divergence, again, is absolutely massive. All you have that stands between you and the abyss, okay, is a handful of stocks. And of course, this is where people start to convince themselves it's going to be okay. AI is going to save us all. And yeah, let me tell you, ChatGPT, you're going to be answering to ChatGPT in no time here. But the reality is you're held together. And that's why I call it a one stock market. Right. And that's the truth is you are in a one stock market. Yeah, there's 5 or 7 stocks that are actually driving the order flow, but you're one stock away from getting annihilated, okay, to the downside. And that doesn't mean that that's the way it's going to play out. You know, the financials could rally, the XLE could rally, but you start looking around the screen. When you start looking at stocks like Walmart, you're like, oh, okay, I don't care who you are, that has got to hurt. Okay, the caterpillars out there, stuff can't get out of its own way. Like nothing is moving in here, you know, and bring up like Starbucks and, you know, consumer stocks and everywhere you look. And, you know, Intel, they weren't exactly the beneficiary of what happened inside of Nvidia and some of the financials. It's horrendous out there. Okay. And again, that's why I call it the one stock market. All right, let's actually switch gears a little bit. One of the things that's kind of fallen off everybody's radar, you better pay attention. The bonds have broken substantially. I am totally bothered by this. I'm bothered by it because if the bonds are breaking, what that effectively has done is taken the TNX. What is the TNX? That's the 10-year interest rate. The 10-year interest rate, wait for it, that's at 3.8%. At what point is 3.8% going to break the back of technology? Like that just can't be a good thing. Can't be a good thing. And on top of it, right, to compound some of the issues, today, okay, this morning, a number came out. What was it? Okay, the PCE deflator. Okay, it's an indicator that the Fed themselves have actually stated it's their indicator of choice. So an indicator comes out this morning, it's the indicator of choice, and guess what happens, right? And this is where you just can't even believe that the marketplace is doing what it's doing right now. You do realize what this implies, okay? Current Fed fund rates are at 500 to 525. We're now pricing a 66% probability of a rate hike, okay? The pause is off the table right now. Right now, we're leaning towards another rate hike. And I wanted to show you that because you're like, it's neither rain nor snow. Nothing can stop the market. Of course, nothing stops the market because the market isn't a market. It's about 1 or 2 stocks that are actually driving order flow to everything else. You have to put aside, check your baggage at the door. There's no fundamentals in here. There's no technicals in here. It's order flow. And order flow is coming in there, and they figured out a way to actually drive flow, okay, and manipulate order flow. And manipulation, I think, is a strong word, but it's exactly what you're seeing. You're seeing call buying to actually drive price, okay? And that works until the music stops. And that's why a one stock market is not going to be healthy for anybody. So the 10-year rate, okay, took off to the upside. If you don't realize that that's at 3.8%, 3.8%, why do you think I'm so bearish inside of the home builders? Home builders can include everything. I mean, when I say everything, everything goes in the home, you know, washers, dryers, whatever you want. I'm bearish in there because a 3.8% 10-year ain't going to be good for anybody. The Fed hiking again isn't going to be good for anything. The Fed hike probability at 66.5%. You want to know where it started? Okay. Well, yesterday that thing was at 1 point down to 17%. It jumped to 30%. By this morning, it was up to 60%. Now it's 66% probability. Another aspect that really kind of resonates with me is the dollar. Okay. Dollar looked defensive to anybody else. Why is the dollar rallying? Okay. Maybe we're going to default. Maybe we're not going to default. Who cares at this point? Again, I've actually been very bearish on the idea, not of default, okay, of basically some spending cuts, a lot of humdrum. Anyway, the dollar, though, looks to me as a very defensive posture. Moreover, okay, and something I've played into heavily, skew is extraordinarily high. For those of you that have no idea what skew is, I'll bring up like a 5-year of the skew. Okay, skew is the out of the money put implied volatility versus the out of the money call implied volatility in the SPX. It's 30-day implied volatility, but it's jacked. This thing has been straight up. It's defensive posture for the marketplace. Coupled with a defensive posture, my take is a very defensive posture right here inside of the US dollar. You know, it was just a couple of weeks ago that I heard it was one of the largest short positions ever inside of the US dollar. Yeah, it was a really huge short position until everybody started actually, rallying in the dollar. All right. Push all that aside for just a second. Now let's talk a little bit about some of the trades. Get your trade on. So one of the first things is I have a bearish position inside of XHB. Okay, you can do that in a number of ways. You can just go out and short XHB. Okay, you can buy out of the money put spreads. I also use synthetics. Okay, so I do want to bring this up when I say I use synthetics and XHB, and I want to reiterate this. So let's go back to XHB. My synthetic position is I am buying deep in the money puts, all right? And this happens to be an IRA. Now I'm deep in the money. I would use like an 85 delta or above. Okay, buying deep in the money puts is a synthetic short stock position, or you could just go out there, short it. Okay, the other thing I've done over here, I closed Boeing. For those of you that were in the trade, I closed Boeing for a 55% gain. Okay, it's over, it's done with. I'm out 55% on there. That was in-out spread. Today, I actually opened a GLD spread. Okay, I'm rather excited about the GLD spread. Why am I excited about it? Because I think it's a nice little upside kicker. So I think the dollar has rallied substantially. If the dollar backs off even slightly, that gold's going to explode to the upside. So I've got a nice bullish position on gold for looking for a little bit of a breakout. I don't need a breakout above like 190. Let's not get crazy up to 185, and we'll be golden there, pony boy. All right, the other thing I actually did was a fairly substantial position. I re-upped hedges and sold strangles inside of the ES and the MES. Okay, I did this in a couple of different portfolios, the ES and the MES, all right, which happens to be options and futures. When I say I re-upped my hedges, okay, I went out there and actually hedged in the 42-day expiration. I've got strangles sold 84 days out. Strangles sold now 112 days out. This is Ultima, people. And I'll tell you what, in a marketplace channeling back and forth, it ain't exciting, but premium selling, that crap works. And that's one thing I will hit you with time and again. That is what works in this marketplace. All right, last but definitely not least here in this weekend's update. Look, 8 weeks inside of the same range, right? So you got to cruise over to the SPX, okay? And with all due respect, look, I get that we're at the upper edge of the range. Everybody's like, is it? This is it. We're ready to break out, okay? Yeah, until, something happens. Again, once the deal is actually announced, well, we'll see what markets do. Don't be afraid, okay, of a breakout to the upside. As I've said time and again, okay, I'm not looking right out here as to what the market's going to do right in front of me, because I'm going to tell you right now, I think that's futility. I still carry a ton of bearish positions, right? But lo and behold, I'm a big believer. A lot of times you got to break to the upside to actually come off hard and fast. Just because a lot of sectors are down, okay, does not necessarily constitute that the marketplace has to break down. But I am going to tell you, again, it won't take much to push this marketplace right over the edge. And you have to actually plan for that. Even if you think we're going to go up, okay, you got to be looking to the downside. Breaking this range after 8 weeks is going to be violent. And it's something I've been stressing literally, okay, for, out of 8 weeks of this, about 4 of those weeks I've actually been stressing, like, look, when we break this range, it's going to be a little violence inside your trade. Speaking of violence inside your trade, in the SPX, this past week in the SPX, we had a $63 expected move. I think the irony of a $63 expected move is that we moved at one point today $63. I mean, like if you look at the S&Ps, they were just up $60 a moment ago, and well, right now, of course, they're coming back to 42.11. Anyway, this next week, things are going to get interesting. Okay, so there's a lot that's going to happen next week. First and foremost, next week, Monday, there's no market. Okay, the market is effectively closed. Yeah, some of the futures will have an abbreviated session, but it's a holiday here. Okay, it's a holiday here. So here is there is everywhere in the United States. It's a holiday. I live in the Virgin Islands. Every day is a holiday in the Virgin Islands, but it's an actual legal holiday. Monday, the markets are closed. Now, we're going to have trade activity on Tuesday, Wednesday, okay, Thursday, and Friday. Why am I bringing this up and showing you every day? Because in a 4-day week, wait for it. Did you know that the expected move, now this is not the solidified expected move, it's not over yet, right? But the expected move is plus or minus approximately $82. Now, it hasn't settled out yet. You got to wait till after the close. Why do we have an $82 expected move in a 4-day week? Because right now, okay, this is pins and needles, people. Things are getting a little crazy. Like, you got to realize there's a lot on the calendar. Look, the advanced decline line is not what I was looking at over here. There's a lot on the calendar. There's JOLTS. There's different PMI numbers coming out. There's some GDP coming out. There's an employment situation. Oh my, okay. I mean, an ADP report. It's just on and on and on. but people are still worried, okay, about the debt issue. Will they raise it? Won't they raise it? Consumer confidence coming out. Oh, it's a 4-day week, but you need to anticipate next week, it's going to be a lot of volatility. Look, I've been waiting for us to break this range now for 4 out of the last 8 weeks, right? Have we broken the range? Absolutely not. Okay. Hey, maybe, just maybe this next week, okay, we'll get it done. Look, just because we're sitting at 42.11 means nothing. It's the same thing as being down here at 41.06. Yeah, we're leaning to the upside, but come of course Tuesday morning, you might say the exact opposite. We could be leaning to the downside. If we're going to break through the upside, you need to see a print like 42.30, again 42.40. Before that, okay, it's all for nothing. It's all coming down to a one stock market. Thanks everybody for joining us here at TheoTrade. Have a wonderful holiday weekend. Bye-bye.